what does that top third, or what the successful searchers have in common, is first of all, they have a sense of urgency, and the longer I'm in this space, the more I start hammering that. And that's one actually that I've stole from Bill Egan. And so we see that actually in the data. The people who sign an LOI in the first 6 months, which arguably are the people who have more sense of urgency, tend to be the ones that acquire.
Welcome to Season 3 of the Founder Funded Podcast, a podcast for searchers by search experts where we explore the roots of business ownership without having that $1 million idea. I'm your host, Carl Lundberg, CEO at Gerald Edelman and founder of the IESE Awards. Now let's get into it.
I'm here because a lot of people gave me a lot of opportunities in life, and some of them are screwed up and other ones I did reasonable with. Bill said, in his very colorful language, he said, "Oh, it's a crapshoot. I own the company. I sold it to you. I'm happy now because I have a lot of money, but then after a while, I have a sense of loss."
Joining me today, we have Jan Simon, someone I've really been looking forward to having on the podcast and definitely one of my inspirations in the world of search funds. Jan is a professor in the Entrepreneurship department at IESE Business School and the academic director of its International Search Fund Center. Jan's also a lecturer in finance at the universities of Cambridge and California, Berkeley, and previously also Oxford. Jan has worked for over 2 decades in the investment industry and is currently the managing partner of Vonzeo Capital, a global institutional investor in search funds. Jan's research has been published in academic journals such as the Journal of Network Theory in Finance and the British Journal of Management. He served in the 1st Battalion of Parachutists and Commandos Special Operations Regiment, as well as NATO's Special Intervention Forces, ACE Mobile Force. He holds both the green and red beret. Jan, great to have you on the podcast. It's a real pleasure to have you here. I've been really looking forward to having this conversation. I thought it'd be good to start with probably your background and talk through, you have a very eclectic background, and it'd be great just to hear the origin story and perhaps culminate in how you ended up working in finance in London to begin with.
Yeah, sure. And thanks for having me, Carl. It's really a pleasure to be here. So long story short, I studied law, both undergrad and grad, and also spent some time with the Special Forces. After having, finished my contract with the Special Forces, I wanted to work internationally. The problem with law is the fact that you only have law, mainly domestic law. And so there was no international career for me there. However, in Belgium, where I'm from, the banks give you the opportunity with a law degree to have an international career. And so that's why I applied for Belgian banks. And they were the ones who said you seem to be good with numbers, you seem to be, pretty resistant with stress. Would you be interested in a career in trading? And I didn't have a clue what they were talking about, and I was like, well, tell me a little bit more, And they said, well, have you seen the movie Wall Street? I'm like, yeah, it's something like that. And I don't think the human resources officer had too much knowledge about, trading floors either. And so I'm like, yeah. I'm like, but can you do that internationally? Because I didn't care too much what it was as long as I could do it internationally. And she said, yes. She said, we have trading floors in Hong Kong, New York, and London, and of course, Brussels. And so I signed up, I did it for like 3 years, but I stayed domestically. And each year I said, where can I go internationally? And then each time I said, you're doing a good job, but still very junior, And so after 3 years, I was a bit tired of it. I decided that my way to go international was through an MBA. So I did my MBA between 94 and 96 in Barcelona, and that's when I got, recruited for my internship at Goldman Sachs, and, the rest is history. So then after my MBA, I worked in the financial markets in London, first for Salomon, and then for Goldman, and last for Merrill Lynch. So I was there all the way from the mid-90s till about 2005.
Yeah, and I guess, back in those days, someone enticing you in with, have you seen Wall Street was, everyone wanted to be Gordon Gekko.
Yeah. Well, the funny thing about, my experience is that like every generation in London just wished they were the previous generation in London, kind of stuff like this. Yeah. It looks like the fun was just before you arrived, and the big money was also just before you kind of arrived, and then
yeah,
still the people going in now say the same thing because margins have been squeezed and what have. But yeah, good time.
Okay, and so big banks in Belgium and then in London. How did you first hear about search funds?
I actually did my idea was to do a sabbatical and banking. I wanted to travel around the world, and so I left Goldman, and great place. probably the best place I ever worked. And so, they said, like, why don't you go traveling and then come back to Goldman? That was the idea. And while I was traveling, I had a place in Barcelona, I used it as a base. The dean of the business school actually said, like, what, would you be interested in teaching here? And I'm like, well, maybe at the end of my sabbatical. So that's what I did, I thought. And I got to know a guy called Rob Johnson, which I'm sure you know, in Bramley's dad. And so Rob was also teaching at the IESE, and we became close friends, and we had a couple of, passions in common. And one passion in common was investing. And I knew a lot about hedge funds and hedge fund strategies, and he kept on coming back to search funds, and he's a very patient man, far much patient than I am. And he said, like, one day he said, like, listen, I've told you 4 or 5 times, you really need to look at that. And so that's how I got into it. And I think a lot of people in Europe, that's how we got into search funds. We talked to Rob, and Rob showed us the way. And that's how I got to know it. I got to know more and more people from the community. I got to know people like Simon Webster, and who's now teaching at London Business School. I got to know people like Peter Kelly, who now teaches a course at Stanford. And so that's how I got into it, First of all, from a curious point of view, I thought it was like those returns, because I had done some research. I have a PhD, and I had done some research in performance persistence and investing. And it was very, very hard to find. At that moment, the only places you would find it was in venture capital and private equity, and only in the top quartile. And for the rest, there was no performance persistence. And here you got an asset class that time after time after time had performance persistence. So I'm like, why is that? That doesn't make sense, kind of stuff. So that's how I get into it from a pure, more kind of, curiosity point of view.
That makes complete sense, and it's interesting how many people were influenced by Rob, who kind of brought word of search funds, to Europe and probably even wider than that. You've got a mixed background in finance.
Yeah.
As you said, you were advising hedge funds and working on trading desks and so on. What was it that persistence of performance and returns that really, in the end, enticed you into search funds after Rob kept turning your head back towards them? Or was there anything else about it that you really fell in love with when you really got into the detail?
There were 2 things, intellectually, once I got it, it makes sense, because I was pretty hung up on the fact, like, giving money to somebody who's never been CEO, I found that like, a bit of a stretch. And then also just giving money to search for a company, I find those things very strange. So it took me a little while to understand, like, why is that and why is this necessary? But it's when I really understood why and how the model works that I really got excited. And and part of it is efficient markets. If you think about market efficiency, the most efficient markets are the large cap public stock. A little bit less efficient are small cap public stock, and a little bit less efficient are private equity. And so what you see is the lower you go, in efficiency, the higher you go in returns. And of course, if you think about it from that point of view, what is the least efficient of all markets? It's small companies that are bought by people who actually buy from people which were not even thinking about selling. So there's no process typically, a selling process where people like, go for, the highest bidder or anything like that. So it's the least efficient of markets. And then around that, you wrap, investors which are really hands-on, which really help searchers, which sits on board. You have boards which is really, more, I would say more capable, for this type of companies. And then, in the middle, you put a hungry CEO. And it's that model which I found super enticing. And by the time I was also a little bit, I had gone tired of investing in a company, without having active involvement, So I was interested in search funds, and I really thought that activist investors were doing a great job at the time, and that was also interesting. But you talk about millions being a lot of money, and then you talk about billions being not enough money, and so those are 2 very, very different worlds. Having already started to teach, I thought that I was coming at that moment in my career where I wanted to pay forward, I wanted to help people, I wanted to reach out, I wanted to use what I had, the opportunities that I had by given by other people to be able to, pass on the baton to people who were now wanted to be CEOs. So I think that's the fun part of it, because if it's only for investing and stuff like that, I think the better asset classes, not necessarily in returns, but in terms of scale, you cannot deploy 100 million in search funds kind of stuff, and so, My partner, who's now, is now at KKR, and, he looks at this like, those are tiny little investments, and you have to do a lot of work, and so you really have to be passionate about it. It's like, you could start Starbucks and selling coffees all around the world, or you can have your small little coffee, shop where you know your clients and happy with that, and really make great cake kind of stuff. And so this is what Search Fund is. It's small, but it's really nice and great people. And I think most of the people, if it's right for you, from an investor, from a CEO, or from an academic point of view, you really get connected with it, and it's really a great space to be.
No, I completely understand that, and I think that's why there's so many passionate people in the space. Because, as you say, if you're purely in this to make money, there's other places to go. But actually, the returns in the search fund world are fantastic. But for those investing, it's not just a pure capital play, right? It does take that coaching and the mentorship and the guidance. And I think that's, seen in the history, the link between academia and search funds, right? Where Irv Grosbeck conceived the idea at Stanford, and many of the professors and teachers and lecturers at the universities are actually the search fund investors who sit on boards. And so was that, that kind of paying it forward, is that what drove you to teaching?
It does, now, in both in Goldman and Salomon, you had big associate programs, and so there the courses are typically taught by professionals. Somebody who's on the risk arbitrage desk will talk about how to do risk arbitrage. Somebody on sales trading desk will talk about the sales trading. And so I had done some of that, both at Salomon and Goldman. I really enjoyed that. So that's when the dean reached out to me, seeing if I was interested in doing that. I thought that might be something I can contribute, and I think I like, and so that's how it kind of connected. But it's not there's not really big design behind the stuff I do. Like, I'm going to do 4 years of special force, and I'm going to do 10 years of trading, and no, it's kind of I try to give my all during a certain amount of time, and then when it's time for something else, then it's time for something else, and so that had come at the moment that I was kind of thinking like, yes, I've done quite some time in investment banking, like. Let's do something different, and what could that be? And then teaching fell into that. Now, if I just can make a correction, Carl, because a lot of people, think, that search fund started at Stanford with Irv. It actually started at Harvard with Irv, and so Irv, when he sold out, became actually a professor of practice at Harvard, and that's why you'll see that the first searchers like Jim Southern and Kirk and Jamie, they're all from Harvard. After a couple of years, Irv moved to Stanford, and of course now it's, you're totally right in saying it's totally associated in the United States with Stanford. But the early beginnings were actually at Harvard, and I think they're probably a little bit annoyed that, Irv went to the West Coast, and now it's mainly associated with Stanford.
I bet. And actually, I do remember reading that some time ago, actually, that he was there at Harvard and then went to Stanford. But yeah, it's very, very useful correction. Thank you. So at some point along the journey then as well, Jan, obviously you're now fully embedded in the world of search funds, and you wrote a book, which, I know pretty much everyone I speak to has bought the book and has read the book and finds it incredibly useful. So it'd be great perhaps to hear a little bit about that, if you don't mind.
Yeah, sure. It's I call it the COVID book because without COVID it would probably not exist. And so when we're all kind of locked up, I'm not the person who watches a lot of television or anything like that. And I thought about the idea for a long time that there's quite some books about buying companies, and there's quite some books about buying small companies, but search fund is very, very specific because you have somebody who's pretty young, you have somebody who has a lot of energy, you have somebody which doesn't have a lot of experience in leadership necessarily, like that. So the model solves for a lot of those things kind of stuff, and so that's why I thought let's write a book about it. And so I talked to Rob and I talked to Peter Kelly and Simon, and they all kind of chipped in, and they each helped with one chapter, I think, on the book, and then the rest I kind of wrote in and brought it together. But yeah, the idea was exactly that, for it to be kind of a reference for people who are either doing it or people who wanted to do it, because you might have read the book. It really starts off with saying, listen, is this something for me? What are we talking about when we talk about entrepreneurial acquisitions and what are the different models, because there's just not only search funds. And once you decided to go that path, then you go to the entire like how do I source, how does a good company look like, how do I acquire, how do I do diligence, all the way until selling the company, and then what's next kind of stuff. So chapter by chapter is actually a journey. So the idea was a little bit, and it turns out that a lot of people doing it like that, but the idea was that people read the entire journey and then start it, and then depending where they are in the journey, can say like, oh, now I'm in chapter 5, and so I'm going to read chapter 5 and and flesh it out, and see how it can make me a better professional in what I'm doing, or how it can answer some of the questions I might have in this stage of the search fund path.
Yeah, that's a really clever idea. Actually, it's as you say, it's almost like a guide, a Sherpa through the process from people who know it inside out. And I do know that a lot of people I've spoken to have found it incredibly useful for them. So yeah, it's one of the positives that came out of COVID. I'm pleased that you had found the time to write the book. So I suppose now you're one of the key institutional investors with Vonzeo in the search fund world. What are you, when you're looking for searchers to invest in, what are the key attributes that you're looking for to make you think? And I know it's difficult at the early stages to assess if this person's going to find the right company and run it well from early conversations. But what are those things you're looking for in the very first few meetings with searchers to assess if you think they've got the right things it takes?
Yeah, no, it's very good to point out that it's a very inefficient process. I remember when I first talked about with Bill Egan, which was at the time, and then his son is still amazing investors in the space. Bill said, in his very colorful language, he said, "Oh, it's a crapshoot," and I was really taken aback from that, because I thought it's investing in people. How can this be a crapshoot? Now having done it for a long time, there's a lot of truth in that. And before answering your question, let me explain why that is. It's because most of the time when people come to us, they've been very successful, but they've been successful at something which I call structured learning. They went to university, they did well, they got a good job, they did well. Why did they did well? Because they did what their bosses expected from them. Then they go to business school, they do well again. All that is structured. The search is totally unstructured. Being a CEO is totally unstructured. As a CEO, you're actually the one, and you know that very well, Carl, you're actually the one who's put in the structure. And you see that some people do that transition very well, and other people don't do that as well. Okay, and so that's why the league it's a crapshoot. It has some merit to it. Now it's not throwing darts. You can see there's probably about a third where you can see this is not your path. No, not everybody should be CEO or could be CEO. Not everybody should do search and could do search. So that bottom third is pretty easy to flesh out. But then what does that top third, or what the successful searchers have in common, is first of all they have a sense of urgency. And the longer I'm in this space, the more I start hammering that. And that's one actually that I've stole from Bill Egan. And so we see that actually in the data. The people who sign an LOI in the first 6 months, which arguably are the people who have more sense of urgency, tend to be the ones that acquire. The ones that have not signed an LOI in the first 12 months, so which are more kind of laid back and maybe this not and this not, don't end up acquiring a business. So that sense of urgency is incredibly important. Now, humbleness, humility is, that's one I was stealing, you have to steal in life. No? That's when I steal from Will Thorndike. That's an incredibly important characteristic also. If you are, if you've been a Mike Tyson in boxing, or if you are, Michael Jordan or LeBron James, you don't have to be humble. You're just on top of things. And you often see that those people are humble kind of stuff. But if you've never been a CEO, and you've never been, shown, you have to be humble, because if you don't have that, what that means, if you do not have any capacity to listen. And part of this formula is the fact that you have seasoned, investors, seasoned board members, and that you have a hungry but coachable CEO. And so if you don't have humbleness, if you don't have capacity to listen, you're not coachable. And so, there's no point even doing this. You'll see that the best CEOs, even in very successful companies, and big companies still have that capacity to listen and the capacity to get better. So those two are very important. And then, the third one is being ambitious. I take my hat off every single day for the people who do that. Think about it, 30% returns, which kind of means buying small company, and then you see those CEOs of multi-billion companies which have the best chief of staff, the best CFOs, the best consultants, they get 10%. So what our folks do, that's gold medal work kind of stuff. And you're not going to reach that unless you really have that hunger in your soul, in your heart, in your stamina to say, listen, I want to do that, and I'm going to do well. I'm going to take a company, I'm going to grow it, I'm going to make it better. And you know what? When I get knocked over, I'm standing up again. I'm going to be better of it, like over and over and over again. So those are three of the elements which for us are coming at high premium when we're trying to assess the people. But again, it's very inefficient because sometimes you see that in person, but then they're great in working for structured companies like the ones I work for, Merrill and Goldman. Those are very structured companies, or the KKRs or the McKinseys. But having that unstructured environment doesn't turn out for them. And then you have people which are kind of okay in those big environments, and you put them then, in those unstructured environments, and they just grow, And so it reminds me a little bit about the special forces, which it's kind of the same thing. You have people which are very, very athletic, and you get them in the special forces, and they falter, and they don't make it. And you have the people who are reasonable, and you put them in the special forces, and they just grow, they just take it on, And so that's why the attrition is also high, in those environments, because what you've done in your life so far, the predictability is not that big going forward.
Yeah, so it seems that it takes a very special type of person that will flourish, and I think as well that there is, as you say, there's I have a lot of respect for searchers who take the leap, because you need a lot of boldness, really, because to leave a job, and lots of them have worked at McKinsey or in big PE or even at JP Morgan or Goldman Sachs or somewhere in good careers where they're earning big money.
Yep. And
they leave, and the next day they're sat at home with a laptop trying to find a company to buy. And there's this, and to kind of keep reconvincing yourself day after day that this is the right thing, I will be able to do it, and so on, is also something I really admire, but it's not for everyone, right? And it's also a very long-term commitment.
Yeah, very true, all very true.
So the next thing I wanted to chat through was what are some of the things that are common pitfalls. So where do people get it wrong? So let's say you've got someone that perhaps demonstrates those characteristics. What are the things that you see people potentially getting wrong in their search phase that leads them to either fail to acquire, or even after acquisition that means that they don't get those returns that others do get?
Well, let's split up before and after. I said before acquisition, is they waste too much time on things which are not helpful, because what they have least of is time. They have 2 years time, and so the clock starts ticking, and that's why that sense of urgency comes in very, very handy. And so that's what I also say to my students, or to searchers we invest in. You want to get to know as soon as possible, and so there's two things that you want to figure out as soon as possible. Why is somebody selling to you? Okay, because think what they're trying to do. They're trying to buy a good company in a great industry at a reasonable price. If I own a good company in a great industry, I'm not selling at a reasonable price. Okay, so you have to force me out. Okay, and so there have to be a reason why people sell, and so try to find out what that reason is. Maybe they're burned out. Maybe they are going to divorce. Maybe they're 67 years old. But you need to find it out ASAP. Another thing you have to find ASAP is, are you in the same ballpark when you talk about value? Okay, because if somebody thinks that they're going to get 10 times revenue, you have to run. You don't have time to waste on that. So coming very early to their nose, and you might have seen the numbers in my book. So like they reach out to approximately 3,300 companies, and that's not random. Those are companies that fulfill the target. Okay, then of those they only get 256 answers. Only 125 of those are positive. They have meetings with 25, with 16 they talk about price. Okay, They have 5 LOIs to buy one company. This is gruelingly hard. And so what we often don't see behind those great return numbers is how hard this is. Okay, so that's why you don't have time to waste. The other thing is, you will not make a deal. You will not grow a company in an office. Okay, so you have to get out. So the days of investment bank, the days of consulting are over. The days of being an entrepreneur or CEO have started. Okay, and that's by meeting the people on the floor. That's by meeting anybody you can meet, talk about it. That's where business is done outside your office kind of stuff. And so that also has to do with time. And the third one before would be due diligence. Okay, and it's like this is one of the weak points in the model. So here you got somebody who's never done due diligence typically, who has a very limited budget of doing due diligence. Okay, and so you have investors behind you, especially institutional investors who are going to help you with it. But the same thing is true with us. We have limited time, and all of us have limited resources. So that's a very inefficient moment, and so that's often where ultimately people pay the price for. I would say once you have invested, I would say the number one reason of failure is, or not number one, of 2 or 3 most important things are, the involvement of the seller. Okay, and so seller involvement often is not helpful, and that's not because it's this seller. It's just because it's the nature of human being. I own a company, I sold it to you. I'm happy now because I have a lot of money, but then after a while, I have a sense of loss. You have my baby. They talk about their baby. That's what they literally talk about. You have my baby. I want it back. I'm going to sabotage anything, which upholds it. And so if the seller has moved on, that's not an issue. They'll have that, and it's just normal. But if the seller has the office next to you, that is problematic. And so seller involvement, is more often than not problematic. And again, this is not personal. This is just the nature of the beast. And then the second one is, and I wrote a note about that one, is is a searcher not growing to leadership. Okay, and so the leadership style that most searchers have when they leave an MBA is what in leadership architecture and lecture is called diplomats. It's people who are they're great at teamwork. They're great in running small teams. They're very likable. They have good negotiation skills, etc., etc. All things that are incredibly helpful to convince a seller to sell to you. They're also incredibly helpful the first year and a half, when you want to get to know the company, you want to get to know the culture, you want to get some data, you want to get close to investors, so all incredibly helpful. But that will not give you 35% returns. Okay, what gives you 35% is a very different type of leader. It's what is called an achiever. It's somebody who really, runs company, grows company, doesn't get, doesn't stand for people who are parasiting, who are not fulfilling their work, or coming late in the office kind of stuff. And that's a very different profile. And so what we see is that most searchers, by the mere nature of the process, transform into that type of leader. Let's call it 18 months out, but not everybody does. And when people do not do, that hammers returns massively, for the searcher as well as for the investors. But those would be 2 of the most important ones that we see returning.
Jan, I wanted to talk about some of the changes in the search fund landscape. We were both at the Stanford conference, and I thought I found it amazing just to be there and to see Peter Kelly, Will Thorndike speaking, and Gerald Risk. It was just amazing. Obviously I'm a massive fan of search funds and the ETA world. So for me, it was a bit of a pilgrimage. But one thing that I thought was interesting was the rate of acquisition. There was a discussion around the rate of acquisition of search funds, which historically tended to be around 2/3, and it seems to be shifting downwards closer towards 50%. Is that what you're seeing in Europe and in your investing in Vonzeo? And if so, what do you think it is that's driving that shift?
Well, so we invest both, transatlantic, in the States, Canada, Latam, and Europe, and a little bit in Asia. So I think we have a good view, and also, I'm also the academic director of the International Search Fund Center, where I see data. We don't see that in Europe for the moment, and so that's why some of the American funds now have shown interest to move into Europe, because the acquisition rates are still, we'll see the latest research which will come out of October, but that's still between 3/4 and 65%. So the acquisition rates here are higher. So there's indeed some soul searching is why this is happening. One of the reasons that this has been offered is that the fact that a lot of new money has come in, in the States, but not necessarily with the dedication that the people who've always been involved in that have done so. No, that could be one of the explanations. Another explanation is also that there's far many more people doing it, and so. If you think about Peter Kelly was the fourth searcher ever, and so, think about, Simon Webster, the first searcher out of the United States. You really have to be an entrepreneur to do that. Like nobody knows about that. There's no single investor in your country who's kind of doing that. You go to a seller and they say they think you're making stuff up. And so now that the genie has gotten out of the bottle, I think we get more and more people who kind of, try this, and if it doesn't work, there's kind of a B plan kind of stuff. And so I think you start combining those things, which is what you get with the more mature industry. You could expect indeed the acquisitions to fall. I think that's a good thing. So I'd rather have acquisitions falling and the returns staying high of those acquisitions than the acquisitions staying up, but then the returns of those acquisitions going down, because mathematically. You put 40K or something like that in a search, you put about $1 million in an acquisition, that is far much more important than the first part. No? So we'll see if that's the case. If investors, start to drop their level, their hurdle of good companies, then we might also get to see that. But for the moment, I don't believe we're seeing that.
Yeah, and I think it's, that's probably only a risk with new investors to the space. I think it's very clear among the seasoned search fund investors that they're not going to change their threshold of what is considered a good company. So that's good to hear. Jan, are there any particular markets or sectors where you see untapped potential? This question has kind of been driven by a discussion I had with someone who's historically a UK private equity investor, but now investing globally, but mostly European in the search fund world. And actually, because UK is so saturated with private equity, there's a lot of roll-ups in industries that have been done here repeatedly, and there's probably very little, if any, scope to do any more of that. But actually, in countries as close as France, it's not really been done at all. So there's huge opportunities. Is there any particular sector or geography that you're really excited about?
Well, UK has always been more difficult. And so that's why I see a lot of the people who've done well in the UK, they haven't acquired in London or in the Southwest, where most of the private equity tries to fish. No? And so what you typically see in general is the easier there's access to data and liquidity, the more private equity is coming into the space. If access to data is difficult to find out, the smaller companies, or liquidity, the markets are less efficient, you see this working well. So, I don't think what we see in the UK is very new. It has always been a little bit of that. I think that's what explains why relatively there have been few searches. If you compare with Spain or with Italy now, or even with Germany, UK should have had more searches, not less than those countries. Nevertheless, they had less. I think also from an investor's point of view, why would you be in search funds while you can be in private equity? If you're in the UK, it's a very efficient market, it's easy to raise capital and what have you. But I would say most countries have their own peculiarity, and sometimes that's tax related, sometimes that's culturally related. And so, we in Europe we still like the UK, but we also we heavily invest in Germany, we heavily invest in Italy, in Spain, we have some investment in France. We tend to look more at we really believe this is bottom up rather than top down. If you want to do macro, I think it's probably better to do something else. If you do bottom up, if you think about the searcher only has to find one company, and then has to grow this company or have to leverage a lot and pay back the debt or something like that. So the numbers are there, I think, in any of the countries, also in the UK. But of course, you say I want to live within an hour of London, it's not going to be that easy kind of stuff. I think it's far much more important, if the country is large, for instance, because what we typically see is searches, if they have a superior product or superior service, the limit that they can do is typically limited to the boundaries of the country. And it's very difficult for those small and medium-sized companies to go outside the countries. So if you buy something in Liechtenstein, it's going to be very difficult, far much more difficult than if you buy something in the United States kind of stuff, no? So I think that's probably more like that. In terms of roll-ups, that's a more difficult game to play because, if you want to do roll-ups successfully, you have to be a seasoned CEO kind of stuff. You've never run a company and now you're going to be a company and you're going to have several and integrate them. We don't like that in the search fund industry when we invest in an acquisition. It's very different when we have a searcher who's been 4 or 5 years a CEO and is now bloody seasoned CEO, and now you can start doing roll-ups, and that has worked out successfully. But the people who have invested from the start and saying this, now let's do roll-up, they often come to regret it.
So just a couple of questions left. What advice would you give, Jan, to someone who's an aspiring search fund searcher or CEO, or even people, because there's lots of people who want to run a self-funded route or set up a holdco or whatever. What's the kind of key piece of advice that you would give them today?
Yeah, to figure out if you really want to be CEO. Okay, I think this is a path to CEO, and when I was young, I thought CEO is being the boss. No, CEO is a person who solves all the problems, okay, or help other people to solve problems. Whenever somebody knocks on your door, it's not to say that you're doing great, it's for a problem kind of stuff. And so if you like that kind of environment where you can solve problems, when you can change cultures, where you always want to do things better and better, you'll be a great CEO and you'll love it kind of stuff. But, the returns will be a function of that. If that's not your path, you're taking an amazing amount of risk, not by searching for a company, but by buying a company and then destroying value, because then you've taken 10 years of out of your prime life and you don't have anything to show off. So I think that's the real question, like, do you really want to be CEO? And so talk to people who are CEOs, who have been successful, not successful, how the daily life is like, and then figure out if that's what you want to do. Once you've decided that's what you want to do, then the question is, what is your path to it? As you put out, Carl, like maybe you want to do self-funded, maybe you want to do it for an accelerator, maybe you want to do a hybrid model, okay? So there's different paths to that CEO-ship. There's not a single perfect path. There's going to be one of those paths which is better for you at this moment of your life, okay? In 10 years, there might be another part which is at that moment better for you at that moment in your life kind of stuff. So those will be the two things. Do you really want to be CEO for the good and the bad? And then, once the answer is yes, figure out what the path is. And that's due diligence.
That's a really interesting point, Jan, and actually something that I can relate to, which is, being CEO is a very different role to what I expected it would be. It's more about, I suppose it depends on the industry and the makeup of your business, right? I work in a services business, and so it's incredibly people focused. And actually being a CEO isn't always about, using problem-solving skills or logic to solve problems, because actually it's about bringing people along.
Yes, managing people.
And there's a lot of EQ required, and not just IQ, and probably more EQ than IQ.
So we see that in the data. For instance, in the first year of the CEO, they spend about 60% on sales, because that's what you want to figure out. One of the things that you want to figure out is, how do I grow? And that's sales. But in year 5, they spend about 65% on people issues. And so it's managing people. It's exactly what you're saying. It's always solving problems around those things, but it's about managing people. It's up to right.
I just wanted to touch on very quickly is your time in the military, because I find that I come across lots of people who have had exceptional careers, and quite often you spot in there that there's been some military background, and obviously in your case it was special forces, which I have a huge amount of respect for anyone that can do that, and I guess that shows a lot of incredible amount of resilience and strength. How do you think that shaped the rest of your career, your time in the military?
Well, I think it gave me a lot of self-confidence more than anything else. It gives me another sense of the importance of camaraderie, of execution, of being disciplined, of holding yourself to your word. I think there's some profound, learnings in that. I was telling to, some of my students, and like one of my most proud moments, in my life was, when we were still living in Vancouver a couple of years ago, I was passing the ball on to my eldest daughter, must have been like 8 years old, and she was passing back, and then I passed it, and it came in the foot of the neighbor son, which is the same age, was at that time 7 or 8 years old. I'm like, Fisher, give it back, and Fisher like, well, I'm not sure that I want to give it to you because you might not kick it back to me. I say, Fisher, I promise you that I'm going to kick it back. And he says like, but I don't believe it. And my daughter turned around and he said, when my dad promised something, he always does it. So give him the ball, no? And so those are, for some of those nudges, I know, they set you up for life kind of stuff. And so you also appreciate in other people, and especially in today's society, but yeah, I've said that yesterday, but things kind of change kind of ago. So those values, for me have been important. And I think if I have achieved a lot of things in my life that I wanted to achieve, it's probably the military who set me up for that. Now, at the same time, there's some great research around military leadership. And one of the things that it shows is that depending on which unit you come from, you will be better CEO in different kind of industry, And so for instance, the special forces, the things that I went through, those type of people become good CEOs in more typically smaller, more chaotic kind of companies, while people who've gone, for instance, been in nuclear submarines or in a tank division or anything like that, they're far much better in things which is logistically important, like ambulance units or anything like that. So it's not that you take a military guy, it's going to be good. You have to take a military guy and then you have to know where to allocate him kind of stuff.
Jan, it's been great talking to you. Is there anything else you'd like to share with our listeners, and perhaps even where they can, connect with you, read up about your work and find your book or so on?
Yeah, I think nowadays there's a lot of great resources. Okay, and so like one is the webpage of Stanford, so the Center of Entrepreneurial Studies at Stanford. You can look it up. You will find that. There's a section on search funds, and I think there's a whole bunch of YouTubes and documents there. But I think the most important document there is what is called the primer on search funds. I think you have to give you an email and send it to you, but it's really well done. It has a lot of information in there. So the primer on search funds. Also at IESE, we have a big research center, so you can look it up at IESE. If you do IESE search funds, you find a publication spot on that. So there's a whole bunch of white papers on there, which you can find also. And so, as you said, the book, a lot of people find it helpful also. So there's a lot of information out there. And then I will talk to searchers and talk to CEOs. You'll see like, most searchers understand that the previous searchers have helped them, and they're now supposed to spend a bit of time with the abiding searchers. I think, I can do the same thing with investors, but do a bit of due diligence before, because if you reach out to an investor and like, oh, I don't really know the difference between a search fund and a self-funded search, you don't leave a good impression in terms of your capacity to do due diligence. And so I would talk to searchers first kind of stuff, and then, then I think it's fine to reach out to some investor or write a PPM and send it out. And that's how it all starts. But don't be shy, especially once you've decided to do that and then have a PPM. I found some people are just too shy. It's like they make doing it as it's like we're doing them a favor. No, this is both ways. We as investors, we need searches. Otherwise, what are we going to do? No. So understand that there's also a value. Like you coming to us with a value proposition, which is you're going to do search. You want to acquire a company. I think that's fantastic. And so this is more on equal footing than a lot of people think we are.
Got it. No, that's really, really useful. But yeah, so make sure you know what you're doing first, but then don't be hesitant to reach out to investors and talk to them about what it is.
And that was very different 10 or 15 years ago, because 10 or 15 years ago, there was no material out there. So investors thought it was normal that you like, what is a search fund? Can you explain what a search fund is? And are you the only investor? Or you're more investors? Like, again, 15 years ago that was fine, but now you sound a bit silly if you don't know the ABC of search.
Yeah, there's no excuse nowadays.
Yeah, exactly.
So we have a standard question that we're going to ask everyone this season, and that is, what is your dream today, and how has that changed from when you were younger? And actually, I kind of designed this question around knowing I was talking to you, Jan, and everyone else is going to be asked it as well, because I was reading your background, thinking, there's so many things you've done, and you've got an incredible academic career, you've got an incredible career in finance, you've forged a great path in the world of search funds, and then to bolt on, special forces career as well. And I kind of think, well, what does Jan Simon want now? What's the dream from today onwards, and perhaps how has that changed from when you were young?
Well, I like working big chapters. So we are third fund. I know we're doing that, but let's say once I retire, like in 10 or 15 years from now, one area I have a lot of interest of is moral philosophy, I think, and ethics, and especially in the intersection of AI and ethics. I think I started reading up a lot more as a hobby than anything else. But AI is, we all know AI is going to reshape and change the world, okay? But it's also going to change who we are as human beings, kind of stuff. And so that's what once I retire, that's what I want to think a bit more about and maybe write a bit more about is like how are we shaping AI and how is AI shaping us, and what is okay and what is not okay. There's already quite some interesting work out there. So that's something that, maybe once, call it 10, 15 years, I might write something about. And then of the world, the world is not going in the right direction as we all see, and so hopefully, it's a bit of a pendulum, and hopefully we swing back. But one of the things I learned, and I'm sure you learned, and is that there's far much more joy in giving than in taking, and so so hopefully more people take that on, and things like how can I contribute, and they'll find there's a lot of joy in that, and seeing how you help people and how people get better because of you, kind of. So the same way as people have helped us, because I'm here because a lot of people gave me a lot of opportunities in life, and some of them are screwed up, and other ones I did reasonable with it. So but let's keep on giving the youngsters opportunities so that they can indeed create their lives and their world.
No, that's a great point to make. And actually, I think there's no community I've come across that does that as well as the search fund world. I think when I first met you, I was introduced to Simon Webster by a guy called Jim Ward, and then from Simon to you, and it's just everyone is happy to spend lots of time and help people understand things and pass on information. And now, yeah, absolutely, I try to do the same, and I think this community is a good place to start for people to look at this and say, actually, how could the world be more like this? Because it would be a better place, definitely. Perfect. Well, Jan, listen, I could talk to you for several hours more, but I know that you're a busy man and you've got things to do. So just thank you so much for coming on. I've really enjoyed talking to you, and I'm sure that there's plenty of really interesting stuff that the listeners will very much enjoy listening to here.
Thank you, Carl, for having me, and thank you for all the great work you're doing, for the community. It's very appreciated.
Don't forget to follow us on Instagram at Found and Funded Pod, and LinkedIn at the Found and Funded Podcast, and comment on who you'd like to see us sit down with next. If you have any questions about what we've discussed today, drop me a message and let's have a chat.